Okay, you can move on.
Uh, I'll be using both English and Uganda. Whoever is not comfortable, you let me know. So, as per the link shared with you in the group, today's topic, I'm very happy given in the group to allow me discuss whatever I've learned throughout my journey of trading. I started trading around 2022, so I'm running my third year. So allow me share what I've learned and what I've experienced, and I hope it will be very good or fundamental to the way you view the market and how you trade. Thank you, Coach. I'll start. So today's topic is mainly market structure. Maybe can I confirm? Can you see my screen?
Yes.
And can you hear me?
Very well.
Okay, so we all know market structure and we have heard about it. It's a very good topic and very important for our trading journey. So it's very fundamental, and I hope for all of those who have experienced market structure, why? Because generally how the market moves. I call it a breathing pattern of the market. And it's mainly a concept where we have our laws. So we've all heard of those terms. A high, we know what a high means. Higher low, what it means, and lower low and lower high. So the aim of today's topic is to make us understand or have a bigger picture of the market. And we already have an indicator which
Yes, bro.
or whose principle is mainly market structure, and that is a smart money concept indicator. So I really enjoyed this indicator, and it's one of the main indicators I use while trading. But what triggered me to have been part of trading for a while, we've had several indicators come, and some are now require subscription. Like one of the good ones we loved was Elliott Wave.
Mm-hmm.
So based on that fact, I was motivated to look up more videos on YouTube, attend the lessons our coach Emaradi always teaches us, and
Okay.
really understand what is this thing called market structure, because it's actually what the market runs on. So ideally, we all know candles. We know the bullish
Yeah, Marion, your network is breaking.
they give us a pattern. Hello?
Yes, please. Your network is kind of
Should I
breaking.
continue?
You can continue, but your network is not stable.
It's not stable at all.
I want to confirm if it's the same for all of them. Yeah, I'm
Yeah.
sorry. Oh, sorry about that. Okay, I'll continue. I said we all know candles, and when a group of candles form, they give us patterns, and those patterns eventually lead to trends. So, from the candles, we get patterns which give us trends. That will lead to the topic of the trends. Already we know there are three types of and downtrend and also the consolidation or sideways market. I hope we all know how we can identify an uptrend and a downtrend. And also, if a consolidation presents, we can tell that this is a consolidation. And for those who may not know, I'll illustrate for you here to show you how. I'll begin with the uptrend. So basically, an uptrend is where the market is breaking highs and maintaining the lows. So it's mainly forming higher highs and higher lows. So in an illustration or diagram, it will look like this. It will move up, that is the impulsive move, then move down. We said it consists of breaking structure, so it will break that previous high, form a higher low, and then push up. So it's important to know those movements as the market is moving, what movement you will be in. So basically, the push which is in the direction of the market, let me say that push moving from the low to the high, it will be, the name is called an impulsive wave. So it's very important for you to know now that maybe if it's an uptrend, are you in an impulsive move? Are you in a retracement? Or are you in a correction? So that move from the low to the high is called, I'll name it here. So that is going to be our impulsive move. So then forgive me about the spelling, impulsive.
But
Then for
Madam
that move
Madam
from
Maria,
the high to the low, yes, please.
I think you can abbreviate those letters instead. Like
I can do a,
impulsive move, you can abbreviate like I am. There you can understand.
okay, okay. Then this will be the retracement, that move from the high to the low to form a higher low, and then we continue. So here, when we break the high, we shall form a break of structure. So here we shall have a break of structure, which can be abbreviated as BOS. So that is generally what the uptrend contains. It includes impulsive and retracement movements. Then if it's a downtrend, we are breaking the lows and maintaining the highs. So mainly price is decreasing in price. So this is the downtrend. And that move from the high to the low will be the impulsive move. Then the one from the low to the high, it will make of the retracement. So it's very important when you're trading, at least, or when you want to get a signal, you first identify the trend. And when you identify the trend, identify what phase or wave are you in. So then for the consolidation is where we are having the market. It's maintaining the lows and the highs, lows and the highs, lows and the highs. So that is the consolidation. We shall not find a breakthrough until we find a structure. So this will lead me to for our time frame: 1 day, 1 week, then 1 hour. So I want you to understand the purpose of those time frames. Those time frames, let me say, if you change from the 4 hour and you go to the hour, price will appear like it will give you more information compared to when you are in the higher time frame. But actually, price respects more of the zones of the demand zones, order blocks, or any other big things we are looking for when it's in the higher time frame. So let me say, I'll delete this. I'll give you an example. Let me say, I'll give you this coin, Solana. Let me say it was at 50 US dollars. Then it has now risen to 80. Let me give you an example. So if it is 1 week, it may appear as a one candle. But if you move to maybe 1 day, you shall find when price first moved, you shall find when price first moved, then pause the bit and then continue to go to the what? To the to the $80. It moves, pauses a bit, then continues. So then for the 4 hour, you may find it paused like 3 times before reaching the 80. So you see how structure or how time frames affect how price will appear. So price moved from 50 to 80, but on the 1 week you may see one candle. Then on the 1 day you may see a candle, then another a bullish candle, a bearish candle to show you a pause. Then it will move up. Then on the 4 hour you may see 2 or 3 or more retracements. So meaning, us as traders, we can take opportunities of the structure or time frames to be able to have more chances of entering the market or entries in the market. So I'll basically show you or introduce you to the concept of major and minor structure, which is mainly influenced by time frames. So depending on the time frame you prefer, us as Royal Q users, we mostly use the 4-hour time frame. So I'll take let me say 1 hour as the lower one. So So I'll give you an example of a structure where I'll show in the 4-hour price will have moved. Let me say it's an uptrend. So price was moving up, down. Sorry. Let me give you an example when it's an uptrend. So that is an uptrend. Let me say that is the 4-hour. So price was moving up, broke structure here, moved up, then broke structure here. But now maybe you shift to your 4-hour, to your 1 hour. Then you find a lot of movements, like a lot of ups and down. Let me say this is the impulsive move. You find a lot of ups, down, ups, then down, then ups, then again the market will retrace, gives you up, down, up, down, up, down, up, down. So the concept I want to bring you to, that you may have a move in the 4-hour, but when in the 1 hour there are several pauses in it. I'll call them all. There will be pullbacks. So imagine if someone knew that my 4-hour is in an uptrend, so it will be moving, making ups and down. But when I go to the 1 hour, I'll have more opportunities. Let me say I enter from, if someone entered from here, someone enters from here, where the cursor is. Maybe they get out, they take their 2% at this high, and they take their 2-3% at this high. So now they are out, they want another signal. They wait for the 1 hour to retrace and maybe reach a demand or another block. Then they also take an opportunity while at this point, enter and get out from here. So you see how it is presenting more opportunities, you knowing where the higher time frame is and you be able to trade in a lower time frame. So this person can be able to trade until the high, and then maybe for the case when it is retracing, they can be able to utilize maybe a channel or a parallel channel and be able to trade also these retracements while the market is in the 4-hour is going down, these retracements. So they enter from here, then get out from here. So basically that is it. I'll give you an example. We all have been using the smart money, the smart money indicator. So I'll give you an example based on that of how you can be able to visualize the major structure, and also visualize the minor structure, playing part in the ability for us to find trades. So I'll basically move up. Sorry. My computer is acting up. Forgive me. I don't know what is happening. So I'll go to the chart, then I'll introduce the indicator. So when I introduce the indicator, I hidden it, so I'll show it to you. You will see what I've been talking about. So what I've been talking about is basically how the market structure consists of lower low, the higher lows, higher highs, and lower highs. So allow me take you through a bit of setting, because it will be important for us to be able to see what the major structure consists of and what the minor structure will be. So under inputs, on the show internal structure where my cursor is, you put a tick, then we'll move down to show swing structure. So swing structure is also a major structure. Swing structure is another name of major structure. So meaning that will be the bigger picture of the market. Then about the bullish structure, we shall give it a blue. The bullish structure of the swing or major structure. It will be colored blue. Then for the bearish one, I color it black. So you will put a tick also on show swing points. So we put a maximum of 50. So meaning for each chart you'll be checking, it can be able to give you a maximum of those 50 swing structures. Then also we shall label the strong, weak, high, and low. So we shall put that, ensure to put a tick there. Then as well, for internal order block, we put a maximum of 5, meaning you can be able to visualize 5 order blocks. And then also for the swing structure, swing order block, it will give us 5. So we shall be able to see also 5 order blocks. That's if they are present. Then also the important part is to note the colors you're putting. So if you see a green, me for the internal bullish order block, I be using a green. Then for the internal bearish are red. Then for the bullish order block, that is for the major structure, I'll be using a blue, like it should tally with the one you used under the structure. Continue down. So I'll continue down to tick the fair value gaps and threshold, and also fair value gap for the bullish it will be purple, then for the bearish it has a red. So those are the settings I have for me to be able to see both the major and minor structure. So I'll show you how the major structure is looking like. So the coin is called Solana. From the settings we've just seen, you can see this green order block. I told you that the inner bullish order block is labeled green, is in color green. So whenever you see green, it will be our internal bullish order block. Then for where we put red, it's our internal bearish order block. So wherever you're seeing a red block or rectangle, that is our inner bearish order block. Then for the fair value gap, if it is bullish, it is purple. Then if it is bearish, it is red. Then if it is external or the major order block and it's bearish, you'll be seeing a black. Like here you will see the red is combining with the black, so meaning the internal order block is now fused with the external order block. So as you can see already, by the fact that we are seeing lower low, lower low, lower highs, and lower low, it means the market is in a what? In a downtrend. Then you can see I'll put this path tool to show you that we are in a downtrend. So meaning I'll stretch from here. I'll draw my zigzag from the low to the high, then to the low, to the high, to the low. Then now market is going to form. It will either break here, this lower high, or it will form a lower high. So if it breaks here, we form a higher high. If it drops before breaking this level, you see, it will be what? A lower low. So we are waiting to see what market is going to do. So you can see how big these stretches are. So that will be our major or external structure. But inside, as I showed you that this is the structure of the 4-hour. So let me say these inner pullbacks, the inner pullbacks, this one, when market was moving up, you see, it was so when market was moving up, it moved, it stopped halfway, then pulled back, then continued to make the lower high. Then from that lower high, it moved down, pulled back, then moved down here to down, retraced a bit, then moved down to form the lower low, and then continued. So you can see how it was able to form that internal structure. So the concept I was showing you. So this, let me change this to a different color. So you can see the concept I was showing you, that the major structure will be very wide, but we can have internal price action taking place and giving us chances of entering. So I'll take you around this area, this from this lower low where the cursor is to this lower high. So you can see if someone was able to spot that now, according to the major structure, the market was retracing. So from the low to the high, when in a downtrend, market is retracing. It's pullbacks on the inner structure. So you can see how it moved from here. It was able to give us an inner high. I'll call it an inner high. Then it retraced a bit, gave us an inner higher low, and it was able to push and break that inner high when it was from the inner higher low. Again, it was able to retrace and pull. Or for some of us who can sometimes use the trend, you can see this will be a trend, an uptrend. You can see here a mini uptrend. I'll call it a mini uptrend because generally the market is down, but internally it's giving us an inner uptrend. So we shall be able to trade that inner uptrend or mini uptrend until it's broken or it's invalid. So then the market was able to go back, and also when it was coming down to break this structure, it was able to form also a trend, like a parallel channel, you see. But when it is slanting down, so for those who can take these opportunities once the market is moving down, but you've seen there is a bit of a trend, it's giving you a mini uptrend, you can take use of when it comes to the lower line, this line, you can take use of it and go up to the upper line. So I hope you've been seeing that or drawing your trends. I don't know if I'm being understood by the people I'm teaching. You can unmute and maybe ask me any questions you have so far. Do I have members present? Do I have members present?
Yes, we are following.
Have I confused you or you have picked something?
Personally, to me, the classes are very okay. I don't know the rest, but to me, you are very, very right.
As if okay, that's all I wanted to present, but if no one is asking anything, I don't know.
Okay, thank you
Okay,
so
thank you
much.
so much.
I think
I think
the rest are
the rest are
pretending to
pretending
be
to
new,
be new
and we have
and we
nothing
have
to
nothing to do.
do. Kadirangi. Unaona videos zangu.
So is the meeting closed?
Yes, yes,
Yes,
yes. I'm
yes,
going to
yes, I'm
close.
going to close.